All right, welcome everybody. It's JD coming to you. Trade All Day is hosting this room for me. We're hosting it on Clubhouse, and this is the Mobile Trader Network Zoom over here on Zoom, I guess. But we're just going to talk about technical analysis, and we're going to really just dive into a few things, a few topics of interest, and things that are near and dear to me and a lot of us. So the first thing I'd like to do is I'm going to put something on the screen. And let me check I'll check the chat bar. Okay, everybody, Satara, we got Renata, Fonsick, hey, Merle, yeah, okay, Selena, April, Aware, Lucretia, Big Bull, thank you guys, everybody. Okay, on the screen right now, first thing we have, and just use the chat, please, if you can, so I mean, and alert me if I'm not sharing the screen, because I get into a rhythm sometimes. Okay, I'd like to talk a lot about trader psychology. It's something that I ignored for years, and you know, I thought if I knew how to do technical analysis and if I knew how to find the right pick winners, you know, I always want to screen. Hey, do you use a screener for stocks? Do you use this? How do you pick your stocks? Sign up for an alert service. All that's great. All that's great, but if without a process that we can repeat, a replicable process, and also without having the right mindset, which is big for me, because we fight ourselves every day. You know, when we buy a stock off of a recommendation and it goes down, and we said, "Oh man, I'm not staying in this any longer." You hop out, and that thing runs back up. You know, and you're like, "Whoa, it did exactly what it was supposed to do." You know, not to say we can prevent that, but one of the books that changed my thinking, that really, I say changed my life from the standpoint, is Trading in the Zone by Mark Douglas. It just talks about not having, we have to adjust our expectations in the market. Whatever your edge is, we all should use an edge, whether it's technical analysis, fundamental analysis, whether it's if we're an Elliott wave guy, if we use Fibonacci retracements, whatever it is, that edge the idea is it will allow us to set up a set of probabilities to where the probability is higher in one direction or the other. And we can't go trade by trade. Probabilities work over a sample size, like 20 trades, 30 trades, or whatever, or anything. That's how casinos work. The casino doesn't know who's going to win. I mean, unless you just really, I mean, like, yeah, and Martin Romy Rome, they played Blackjacker, and Romy Rome knew he was going to win that anyway. But point I'm making, a set of variables or probabilities, they need a sample size to work, and we have to operate within that concept. So let me just go through a few of these. Yeah, Mark Douglas is one of his top quotes. If your goal is to trade like a professional, and be a consistent winner, then you must start from the premise that the solutions are in your mind, not in the market. Okay, everybody will get in there and say, "Oh, they're manipulating the market." Blame the market. The market took that money from you. No, the market didn't take the money from you. We gave the money to the market, and either the parameters weren't set properly, or hey, we took a loss. That just happens. I mean, we just have to live from that, because and I hear Cazell say it all the time. I hear Lucretia mention it. You know, our emotional cachet, or emotionally, we don't want to spend emotional capital. So when people are, "Oh man, they're doing this and they're doing that," that is a waste of time. Why is it going down? Okay, so let's say we know why it's going down. What's the remedy? What's our response to it going down? Or why is it going up? There's no news. If we are, we can't dwell on those movements. The action that we look at is price action. And guys, if you're just coming in, this is a technical analysis breakdown. I'm a hybrid guy. I use technical analysis, but I also use the CAN-SLIM method, brought to the forefront by Bill O'Neill, Investors Business Daily. You guys can go to investors.com.
I'm sorry, JD.
Yes.
Quinn is having a problem getting into the Zoom. She's saying that the password it's not allowing her to go in.
It's the right one. It's the room.
Okay.
Let me
Mike,
pause
did
it.
you get that?
It's all right. Everybody's in here. Okay. Next thing to focus on right now, guys. Number 2, he talks about when you achieve complete acceptance of the uncertainty of each edge and the uniqueness of each moment, your frustration with trading will end. So the point is edge, and edge is anything that we use that provide, like people back test their edges all the time. Like I'm a technical analyst, or I use technical analysis, and I like to have certain patterns, support and resistance are key for me. Certain patterns tend to produce uh, certain results. It's not 100%, nothing is, but over, I don't know how many trades, but when I see a falling wedge within a bullish trend and my RSI is in line, I'm comfortable, and I see the proper reversal pattern, maybe a pattern on the candles. I move in on that trade. That's a signal for me. When I move in, yeah, you're like, man, I want this to be profitable. I want to win. But as we hit that button or whatever, the only thing that we know is that something will happen. That's why I set my stops, and I have an area where I look to for, okay, if it's going right, it's going to reach this little area. So price levels, I don't go into it. I had to get to the point where I couldn't say, well, man, this didn't work. What's going on? They don't work every time. That's why we it's not, I guess we could say we're hedging, but we protect the situation by setting a stop to say, oh, I'm only willing to risk X amount of dollars or X amount of price or X amount of ticks, or if you're in Forex, this amount of pips to make this amount of pips. So sometimes people say you go 1-to-2 ratio. You risk, let's say you're doing have $100 online. You say you want to risk 50 of that to make 100, or you want to risk 50 to make 150. 1 to 1.5, 1 to 2. You have to establish a ratio before we go into the trade. That is key. So that will prevent us when we move forward, guys. And I'm gonna get to the charts, guys, but this is so important. When we move forward, we won't pop into a room where somebody said hop into Orphazyme, and at the top, at the peak of Orphazyme, and then you say, well, what do I do now? We should never say, what do I do now? Don't, especially not to a room of strangers. We become our own expert. And one of the things that will protect us also is if we establish who we are. Am I doing, is this a trade? Is this going to be an investment? If it's an investment, what's my time horizon? And when we establish a time horizon, that protects us from just going panicky, where we may have gotten in right before earnings. And people, this is every week, especially during earnings season. Well, their earnings were good. They beat on the top and bottom. Why is it going up and down? Why is it going down? Who knows? Who? Oh, they had great earnings. So why are they? I mean, yeah. Or then it pops. Oh yeah, they had great earnings. I knew it was going to go up. Well, we don't know, because you never know. The unknown event is the conference call with the CEO. Forward guidance is a mofo, especially during COVID. During 2020, people removed forward guidance from every one of their earnings calls because they just didn't know what was the next move was. So analysts could predict this. They have the price target of this. But what they don't tell you, well, what people fail to look at is that they put that price target on, but the price target is in effect for, it's almost like a tornado watch or warning. They say it's in effect for, Johnson County from 3 p.m. to 10 p.m. So their price target or the upgrade is 6 months out or a year. Or with Cathie Wood, people, Cathie Wood, okay, I didn't say S on there, Lucretia. Cathie, I was trying to say, but Cathie Wood will step in there and she'll make a call, and she's an active trader within an ETF, and they're on a 3 to 5 year window for the play to work. So when people say, oh man, she sold her position in Tesla. Well, let's just back out a little bit and look at her style. they're more so swing or position traders, or even active long-term investors when you look at a 3 to 5 year window. And I'm saying active long-term in this new era, long-term in 20 years, man, it's like 20 weeks, the way we move in and out of activity. So back to the time, the time horizon, establish that before you get in. Like if you get into Bitcoin, don't just say, well, I'm in it and it's down. I was thinking I should sell. So what was the plan? When you get in, say, okay, look, I'm in this thing. I'm gonna stay in this past Thanksgiving. You know, this is the baby diaper money. I can't lose this. We can't play with that. You know, we cannot do that. Or you know, baby girl needs those braces. Do not put the braces money in a volatile asset. Or if you do, expect a loss. And if you hit, you hit. But the point I'm making, guys, establish a time horizon, whether it's 6 weeks, 6 months, 6 years, and then kind of live with that and reassess. It'll kind of keep us from panicking when you run into earnings and it sells off, because we can never predict what that price movement is. And people who say they can, they have to prove it to me, because you should be rich, because there are enough earnings plays throughout during earnings seasons to where if you have that process down to perfection, you should retire. So the point I'm making, there's such that beware of earnings if you're a trader, but if you're an investor, we have to accept and live through earnings, the ups and downs, because our landing strip is a little bit longer than, you know, if you're using weekly options or whatever. But an investor who I like his name is Jim Ropel, Roppel, and he talks about really the best way to, you know, to accumulate wealth. You're gonna have to either you buy shares and buy and hold long term, and he trades as well. But also you do need to have an ability to build up your cache of stocks, you know, your portfolio. So let's see what the next one is. When you genuinely accept the risks, you will be at peace with any outcome. So we can set our stops, but we still may not accept the risk. The risk is that we don't know what the outcome will be, but we can find consistency in randomness. So if we have to apply our edge. The parameters have to be set. So when I ask individuals, I'm like, do you have a trading plan? And well, no, you know, I just want to kind of swing trade in and out of this. Well, we can swing trade our account to zero. It will happen. But I know you guys can't see this, but kind of that's my trading plan. I keep it right here, but it's not my only one. I have another trading plan for if I try to go with just if I want to scalp, if I want to swing trade, if, you know, there's certain parameters that must be set for me. And I keep that there. I have it memorized, but I like to have it by my desk to, if I, you know, you fall into bad habits, sometimes you want to reference that. So building a trading plan is easier than it sounds, but it still takes some time and some working out. It just takes time. So guys, if you're getting, and okay, here it is. You hop into a room, you see a group, and you pop in, you hear somebody say, yeah, I'm getting into XYZ. Oh, shoot, XYZ, that's only like $1.47. Shoot, or it might be 86 cents. It's not that far from $1. We don't know what the plan is. We don't know what that individual's account size is and what his reasons for, or their reasons for picking that particular stock or ticker. And a lot of times they're not there when it really hits the fan, when we second guess ourselves. Like, man, I put $500 in. I've lost $300 in value. When do I get out? That we have to define those moments, because it's going to happen to everybody. Even if we have the best laid plan, it's going to hit us to where, oh my goodness, man. And a lot of times here's what happens is like, we'll let that loss run, because we're like, it's got to turn around at some point. Got to turn around at some point. Got to turn, and it keeps going down. And you're like, oh my goodness. And finally that pain threshold hits and we hop out. Well, charts and the market and price action basically is just a reflection of our fears and our greed. And by the time we get to that bottom, there's another group of individuals who also were holding and feeling that pain. and they zipped out of there, and they sold at the last, and finally when it sold, it started going back up. And if we look, we're like, wow, how is that possible? They manipulated this. They were, and people, if you start a room like that, people will feed off of that. Yeah, they're manipulating this, won't let us get out, won't let us buy. Won't. Well, be prepared for it. Because if you look on the chart, we look back to the left at some point in time, that was really a demand zone. That's where support was. And price has a memory a lot. And we can look at certain stocks like there'll be the really small biotech companies, and people will say, well, they have a new liver psoriasis drug that's up for clinical trials, man, and all they have to do is get approval, and boom, to the moon. So we're betting it. We're betting our money on that we're on the right side of a clinical trial. When the CDC can't even give us an idea, they can't get FDA approval, official approval of some outstanding research that these companies are trying to do for COVID. What I'm saying is, like, we're leaving it. Everything is out of our hands when we press send or press go or buy or whatever. But with biotechs, there's more to it, because we can't use fundamentals a lot of times on the short term. Over the long haul, fundamentals come into play. Long period, you need to, we want a company making money, but if we have a growth company, a lot of times we're going to be pre-earnings. They're going to be reinvesting their income into research. But with biotech, a lot of issues come into play. We have to pay attention to the news. We have to keep up with everything. Good, Brian?
Yeah, I'm sorry. I just had a question.
Oh.
You're talking about in the trading plan.
Hey, man.
Yes.
Can you let me pause that.
Okay, I'll hold that.
Okay, thank you. Brian Dillard. No, I'm messing with you, man. Brother threw me off the tracks, man. Thank you, Brian. But anyway, point is, guys, with biotechs, there's a lot of news. There's a lot of uncertainty. And if I could chart that biotech out, and then the next morning they come out and say somebody has negative adverse reaction to this particular drug, and the street could read that as horrible, or an Alzheimer's drug comes out and they say that they've had positive results, and the street could read that as negative because they weren't positive enough, and it trumps all my charting and all this and that. Or even, and people were saying, oh, they're going to have this new product coming out. We can't rely on that because there's too many uncertainties. But if you do, now there are ways to hit on that. You have to allocate a small, you do what you want, but it's preferable that you treat it as a lottery ticket, a scratch off, whatever you allot. If you're big time in the country, I know, like my family, and they'll buy those scratch offs, man, every week. They'll sit up there, let me get that $5 one, Jim, and scratch it off. Let me get this one. Let me and hit it 45, baby. Stuff that's scratch off money. That's how I treat those little 85-cent, 4-cent, under a penny biotechs, because you cannot scratch a living out of that. It's even more random than the random events in a regular market. So be cautious with that, guys, because that's one of the trends that I see. Somebody comes into a room, and if every stock that you ask to have analyzed, that you always play, is like that under $5, because it's common, because we're trying to save money. And we don't start off with big accounts in most cases. That 97-cent stock is kind of attractive, but the components of that stock are what kind of can throw us off and cause issues. So be careful with that. And Brian, I tell you what, man, with trading plan, I'm not gonna go over that one today. I want to have everybody go to Investopedia.com, and that's going to be the homework for the trading plan for somebody building a trading plan, man, because it's going to come down to them identifying themselves as if they're a swing trader, they're going to be a day trader, a position trader. So Investopedia.com is one of the best spots to kind of just type in, and you start researching trading plans. And I'll matter of fact, I'll get to it a little bit further out. But next move, guys. 5 fundamental truths we have now. If we live with this, and honestly, man, this trumps the trading plan, what we're going over right here. Because if we could have the best trading plan, but if we won't allow that trading plan to, we won't see if it works, if we don't have these tenets in place. So anything can happen. Absolute truth. Anything can go down. You don't need to know what is going to happen next in order to make money, because we don't know. We only have an idea or a hope. We work from probabilities, like the casino works from probabilities, and individuals who sell options, they're in a strong position. I trade options from the standpoint that my parameters are, I'm trading them as stock. So I'm a delta trader. I'm a little bit closer to the money. So I'm not really buying the options that the brothers who really sell those cover calls or sell options are selling. I'm not on the other side of, there are times that I am, but most of the time I'm not. So we're not in the same line. There's a random distribution between wins and losses for any given set of variables that define an edge. So the randomness does come in, guys. There's times where like this trade isn't working out. It's just not working out because we don't know who's on the other side of the trade. There's dark pool money coming in. Order flow is crazy, just something. And sometimes we can see a news event on the charts before it hits the wire. Like, man, this is kind of weird. Some volumes coming in. The price action is really kind of crazy, little things like that. So the number 4, let's go. An edge is nothing more than an indication of a higher probability of one thing happening over another. That's the edge, guys. We know 6-4 never domino. Anyway, that point I'm making, guys, if there's guys who play dominoes who know their hand is strong. With spades, you don't count your queens because you might get slapped by your wife. And if you renege, there's the divorce coming. But you counted those queens and we got set. The edge isn't there. So the point I'm making, guys, we have to have an edge that we can repeat over and over and over again. And it's still not 100%, but there's some where you see a hammer candle in a bull trend and a pullback to a moving average, and there's a hammer candle that sets for the day. And when the price breaks above that, the next day price goes above that hammer candle, I can put my chips in and set my stop. It still may reverse back down, but the edge is there to where that's a reversal setup that I like and that I've seen over and over again, that I'm comfortable in certain aspects. So number 5, if we surround everything with every moment is unique. Every moment in the market is unique. Price has a memory. When it gets back down to a support level, that can be a demand zone. A lot of times we do see buyers coming in, but sometimes we blow through demand zones and we blow through supply, which is tough to do. When supply is resistance, guys, and we can talk about that at some point. Next one. Now I'm gonna wrap it up and we're gonna get to the charts. When you really believe that trading is simply a probability game, concepts like right or wrong or win or lose no longer have the same significance. We have to come up with the edge. We have to live with the probabilities. We can't say, so why is it going down? I don't know. Did we get stopped out? If not, the trade is still live, baby. Let's keep riding it. If we get stopped out, we move to the next one. And we can't ask why. I mean, everybody's curious. We're curious to know what's going on. Did they come out with a new thing? Because that kind of moves the clubhouse room. So what do you think was the reason that they did this? I don't know, man. I don't know. What if we get that info, how are we going to apply it? But it makes for good discussions and talks, and everybody comes up with their ideas. But even on CNBC, Bloomberg, no, they don't know. Now there are people who are within the walls of the conglomerates, whether it's I don't know, if a big institutional mover has come in and wants to move the market. Now here's a tidbit that I always use, guys. Average daily volume for me to trade a stock, I need 500,000 minimum. I prefer 1 million. And you can look at your average daily volume by going, let's go right here, guys, FinViz, or you can go to a lot of places. You go on TD Ameritrade, finviz.com. And let's just go Let's go Apple. And y'all should, I think you're seeing it. I think you're seeing it. All right, Apple. All right, guys, FINVIZ.com. Great website, a lot of free stuff, but you have to deal with some pop-ups. They have charts. Now, when we go down, Apple's on the NASDAQ, okay? We got that. It's in the technology industry or sector, tech sector. The industry's consumer electronics. It's an American company. I go to average daily volume, but I also like to look at a few other things. But let me get this off of here, guys. There we go. Where's my average daily volume? I know I'm looking right by it, right there. So on average, it trades 77.85 million per day. That's well over my 500,000. Now you guys might think like, oh wow, 500,000. There's going to be times where, like we saw another stock the other day that people were hopping in. I can't remember, but it was trading at 44,000, 10,000 a day. Then all of a sudden it popped up to 1 million. You know, so one of the young guys, there's certain guys who specialize in low float stocks, like DeAndre. He likes to see a low float stock, and then he wants to see volume come in, and I avoid them because I always say, I mean, my joke is the Qs on Graham Lazar can move a stock that has 10,000 shares outstanding. They can put the money together, get the refund check, you know, get your Pell Grant money together, and then they can move that stock and do a pump and dump. You know, low floats, you'll see a stock run up and go straight up parabolic, and all of a sudden the price goes back down, and people say, yeah, I was in that, and you know, it was up, it ran up to 76 and I didn't get out. Now it's down to 6 and I lost my money. You know, it's just, so I'm holding until it comes back to 76, which it may never happen. Okay, another key, guys. I want to go a little bit further. Thinking, this is okay. Distilling trading down to the simplest form is a pattern recognition numbers game. You recognize certain patterns. Now, guys, if you're a fundamental trader, there's certain individuals who really put together a thesis. That's one of my things when I search for stocks. I build a thesis, I build a theme, and the reasoning why a market is attractive to me. You know, EV was on the watch list for me for a couple of years. EV, cybersecurity, the miners, because we definitely were looking at rare earth metals for several years because you're going to have to use those in the EV sector. When the infrastructure came in, looking at steel, looking at concrete, you know, you're looking at the ticker CLF, NUEX, STLD, things like that. But the time frame of an infrastructure bill may not balance out to a short-term trade. That's a longer-term window. That's where we have to come up with the ideas that, okay, is my edge working for short-term trades, or does my edge work for me for a little bit longer-term return on projection? You know, that's what we're looking at. We're projecting forward. The idea is, like, we use market analysis to identify patterns, define the risk, and determine when to take profits. The trade either works or doesn't. We can't we can't rack our brains. Number 10, why do casinos make consistent money on an event that has a random outcome? Because they know that over a series of events, the odds are in their favor. They also know that to realize the benefits of the favorable odds, they have to participate in every event. So I like going to the craps table whenever I go to the casino. I know the odds are against me, but there's certain the probability is higher to have certain rolls come up a little bit more often than not. You know, snake eyes, you know, 1-1 is a very rare event. That's why it pays out, what, I don't know, 50 to 1, 125 to 1. Any craps pays a certain level, or a yo 11, you get a 6 and a 5. That pays out, I think, 25 to 1. But it's still all in favor of the casino. It's still all in favor of the house. So there's not many, and roulette, every one of those are in favor of the house. So there's certain ones where the odds, the ones where you start trending the odds in your favor. You have like Texas Hold'em and things like that, where the guys that go to the World Series of Poker, it's not just random that they're throwing cards out. They're a sequence of events sets things up. So guys, okay, let's go to the charts. Go to charts real quick. Not real quick. It's not going to be real quick. But on the screen, I think we have here, this is the SPY, S&P 500 ETF. And what what I'm looking at the weekly chart, guys. This is a weekly chart over a 10-year period. This is Thinkorswim on TD Ameritrade. Now, if we look, as I zoom in, when I draw a trend line, I like to draw my, we draw bullish trends from the bottom. I use, I start off with 2 points, but what I'm making is right here, guys. Look, I can draw this trend line, the bottom of that second point, and over the macro, the SPY is trucking. It is bullish. It is heavily bullish. There have been pullbacks within this, but if we got into the SPY, what's that week? March 16th of 2020, and we hopped in March 23rd of 2020 at the open. It was at $228.19. And we stayed in this SPY. We put $10,000, $5,000, whatever, 1,000, 500, whatever we wanted in. We've doubled. This thing was at 228, and it just ran. But we had we can take profits. We'll take profits at the wrong time if we don't have a plan. So if you hop into a play, whether it's stocks or options, establish a time horizon. Like, I want to be in this thing for 6 weeks, 6 days. Do that first. Then as you move forward, you establish like, okay, if I do a trade, I'm willing to risk it's a dollar bill trade. That's why I get 30% Players Club. That 30% risk, but I want to try to make 40, 50. See, everybody wants to make 120, 300. You can make it on certain plays. You go out to the leaps, Brian Dillard's favorite thing, that's one of his specialties. Quite a few others in here, but that takes time to generate that. But there are times you get the right move. And I know Lucretia pulls those 100%ers out on the SPY all the time, on Amazon, a lot of several others in here. But there's a set of risk factors in place. So as I zoom in, guys, and looking at the weekly, what I've identified right here, let's remove this bottom line. This is a trading range, but it's a bullish channel. And when I spot a channel where, when I see something moving within a trade, you can spot a pattern. Runs up. Now, in the beginning, you can't spot a pattern, but once it establishes a rhythm, you're like, you know what? Okay, it's testing the top of this. We have a trend line up there, goes back down here. I have 2 points, give or take. I was using that particular point as that, but still, the bottom's established. So I extend them out into eternity. Test the top, test it again, sells off, but it doesn't retest the bottom. So it's still bullish. It's very bullish. Runs up, kind of staying in the middle. I entered back in there again. I mean, this thing is, when I see people say, hey, are you going to get puts on this and puts on that? And the only reason that they're getting puts is because the statement is, it can't keep going up. Well, it absolutely can continue to go up. It's our natural thing to be contrarian. There's a lot of people who make money being bearish, because a lot of my best plays are when I buy puts, man, when I'm shorting the market, irrational exuberance. And I'll short sometimes. I'll short those crazy run up plays, or I'll buy puts on like Orphazyme when people are just believing. There it is, right there. To the point of like, you see something right here, you see a run up like this to where we have, I don't know if you guys can hear that storm outside. Okay, look at the left-hand side right here. You see the volume on the screen. I pay attention to volume. Each one of these candles, they're very tiny. They represent one single day in the trading market, in the market. Okay, so the volume on this date of March 9th, 2021 is $6,788. This is the classic pump and dump. 6,000, that's, people can get 6,000 shares of this one and was trading that day. You know, it's like $12 or whatever. Somebody can, people can, a small boutique firm can move this market. So Orphazyme had their news coming. They had a big event coming up. So we're coming up to it, 20,000, 60,000, 50,000, 44,000. And then all of a sudden 7 million shares pop in. And it opens that morning at $5.25 and it runs to 77 on one day. And we're rich. We made it, baby. We made it. Won't he do it? Won't he will? Amen. Jesus knows. But there's no plan. It's not many people took profit, but there are quite a few who took profit there because we can see the rug pull where there's this is called a wick on top on a candle. Candlestick charts, you have the body, then you have the wicks. The wick is like price runs up, and then all of a sudden when a wick is created, that means a lot of the price action has fizzled. It's where the wick on top means the buyers have come in and overtaken the sellers. I mean, the sellers have come in and overtaken the buyers. They pushed it back down. So price was up there and just deflated, just came back down, and people said it's going to go back up. It's going to go back up. But during this price, the end of the day, they sold off. Into the next day, it sold off a little bit more. But people they stayed excited, and they tried to run that thing back up a little bit, and they couldn't do it. To me, it's a dead cat bounce, gap down, and it's back in its old stomping grounds. And volume's still high because there's 7 million bag holders still there. So we have to be careful when we move into any of these very, very low float stocks without a plan, and don't trust it. Expect it when it runs parabolic. Parabolic means running straight up. I'm gonna show you AMD in comparison. This just all of a sudden, this thing hadn't done anything for all these for this amount of time, just doing this. And so did they just come up with a new, they brought in a couple of dudes from Stanford, and they said they're coming up with a new one, and finally the pipeline is hit. What was the true catalyst that made this happen? Nobody's talking about it. Or Genius was doing that. And Genius runs up, and you see anything that runs straight up 90 degrees, you take that money and run and hide. Don't even look back at it. Don't look back at Sodom and Gomorrah. You take it, or was it Lot, pillar of salt? It doesn't matter. You just don't look back. You run. You get your money and get the hell out, because nothing goes up like this without coming down. Now, sometimes, like if this is short squeeze with GameStop, those are anomalies. A run up, a slight pullback, crazy, and then they run it up again. But you can kind of monitor that. That's a new that is a new phenomenon, the Wall Street bets phenomenon. And I think people are still kind of developing, but somebody's going to perfect that, the market sentiment of the Gen X or millennial crowd. And that kind of ties into me for I like Robinhood, not as a options trader, but as an on-ramp. And Robinhood has some of the highest retention of accounts, and the most account increases. They have the data. They have a lot of data, just like Coinbase. Just, so I'm big on that, and I'm past the fact that they did what they did during GameStop, because these guys were almost insolvent. But the one key factor that got me on Robinhood was that they were about to be insolvent, and Citadel came in. The money bags came in and gave them over a few billion within a 24-hour window. They didn't do that just because they're friends in the old boys network. Nobody's billions. So there's something extremely valuable that Citadel wanted to be able to have their hands on. So anyway, let's go to AMD real quick. I'm going to show you this chart. There are points where AMD kind of goes a little bit parabolic, but it's within a broader move. There's different levels of stair steps. And here's, write this down, the Wyckoff phases, WYCKOFF. Wyckoff market phases. Richard Wyckoff, you know, was a big time trader, investor back, you know, I say olden days, you know, in the early 1900s or whatever. Market phases, he says accumulation is when, you know, when the market is just going sideways, when it, I'll put it on the weekly, it's easier to see that. Market's going sideways and really not doing anything. Accumulation phase, a base is forming, nothing's happening. You go from accumulation, that's the share accumulation, to a markup, small markup where price increases. But there are points when price increases that there's irrational exuberance where price really increases, and people, have you heard about this? Did you hear about that? When they start running to the hills and everybody, it spreads by word of mouth, and a lot of you see volume increase in certain points, and that's irrational exuberance. So a lot of times irrational exuberance, there's a hangover. So you get a pull back to the breakout area. So we're still in the markup. Then you have a reaccumulation phase sometimes. So it goes accumulation, markup. Then you'll have a distribution phase where it flattens out. And sometimes it'll have another markup. But the distribution is a lot of times it's a topping pattern. And then you'll have a markdown, which we, you know, it could be a short run markdown, or it could be a little bit longer. Then you have a recycling of it. So the point I'm making is we need to know that we want to identify market phases to where we might buy at the top of, at the end, at the exhaustive end of a bull market or a bullish run, where that mark is going to recycle and has to go back through it. And we need to give it time to recycle if we're looking for a longer term trade. So don't get down if you like one of the leaders. You know, Kathy Wood had to go through that with the high growth stocks. Anytime we get an inflation scare of raising inflation, growth sees they run for the hills and go for, you know, a little bit safer plays, cyclical moves, things like that. So keep that in mind. Let me put MU on the board, guys. That was one of the requests that was asked. And I'm gonna go on the daily chart, guys, and I'll do a swing trade analysis on MU. I think Michelle asked for that. Micron. Okay. And I use word association a lot. Chip sector had a lot of headwinds right now with the chip sector. A lot of headwinds over production, things like that. Let me remove that. I see just off rip, you know, I mean, have lower highs. We have a bearish trend markdown of within this phase. We had a breakout from a nice wedge break back December of 2020. But we were steadily declining. If you're looking at this for I don't know, for a trade, a short-term trade, there's not a setup right now. There is a gap that it may fill, but if it breaks above this 7220 handle, it's going to bang its head right at that 73 or even 73.50, where, you know, the gap fill is 73.72. But, you know, price like whole dollars and half dollar marks are prices where people will take profit. Sometimes they'll set stops and things like that. So we need to watch that. MU doesn't look good for me now. Okay, guys, here's the difference between a trade and an investment. If you like MU, you have your reasons. Peter Lynch talks about we're the experts, know what you trade, The reasons why, well, I like you may know Micron owns patents in a certain particular area, like Texas Instruments, and you're long-term bullish. That's not my place to tell you don't invest in this company. You have something, just establish your time horizon, because we're going through a pullback period. We may come down. There's support there, but there's also a gap down here that may be filled during this pullback down to 58. I can't say what it's going to do, but there's support at different levels. We have support thresholds, at 64, 65. This wedge break provides, and I'm not using any simple moving averages on. It's naked, it's bucket naked on this chart, right? So that's I just want to see I just want to see the patterns. It's a no-go for me on Micron. Honestly, if price breaks next week below 69.88, I'd look at a short entry for my puts. And if it really tests below 68.81, yeah, man, I'd be in puts. I'm gonna write this down. Sorry, Michelle, but Micron's on short watch for next week for me. Now, guys, look, that's not to say go in and buy puts on Micron. It's something that I'm keeping an eye on. It's not bullish. Let's see what we have here. And if you want, I'm going to keep going over some charts, guys. If you want to put the charts put your chart requests in the chat, and I'll go over it. And I'm bullish on Apple, and Apple's kind of right now possible bull flag, but it's horizontal. It's reaching a little bit of resistance, light trading range. This is a doji, guys. Let me remove this. Doji candle. Go to Investopedia.com and learn that it means indecision. We don't know what's next. There's no buyers and sellers are kind of at an impasse. If we break above these levels right here, that 150 handle, what's the high right here? That 150 right on the nose. Break above 150, it could push a little bit more, but a lot of times breakouts break out and they come back and retest the breakout area. You just don't run and go like this was a pullback, had a little breakout, retest, it fell below. And so when I say support and resistance, it's not a concrete area. It's not like, okay, boom, JD said support is at 145.20. It fell to 145.18. He was wrong. Nah, man, it's the area. It's a region. It's an area. So it's like a chain link fence. Price will press on support or bang against resistance. And sometimes the support is pliable. It flexes like a chain link fence. It'll lean in, and price can go down below a little bit and find secondary support, but it's still a support area. So the support area could be there down to here, or even down to this low area. So it's a window or just a space. So let's pull up a couple of tickers. Okay. And guys, I'm gonna be real with you. If we get in one of those one with the like 6, 7 letters in it, I'm gonna know it's an 18-cent stock and I can't get you, man. Except there was one Bruno mentioned the other day. Okay, there's people who make a living in those penny stock markets, and there's a process. And if you're gonna do it, I urge you to study it because it will help. It will help. Okay. First one is Chegg with Renata. I know Renata is a big time researcher, and she studies deep research, deep dives. Let me see, I didn't do that right. It's CHGG. All right. Do I have the, yeah. All right, Chegg. And Renata, I think you were looking long-term with Chegg. This is not, just off looking off the chart right now. It's a choppy move. We actually had a head and shoulders there. Let me draw that for everybody. Look, guys, we'll see patterns. Pictures of paragraphs on load. All right. We have a head, left shoulder, right shoulder. Head and shoulders is bearish. Not right now, though. I'm just showing you the pattern that occurred. Okay. So the head, left shoulder, right shoulder. And we draw our neckline across the lower parts of each shoulder. So that's the shoulder. So the low of this shoulder right here, I would start my neckline and I would go to the low of the right shoulder. And I mean, you can check me on my work. It doesn't have to be perfect. I can drop a KMA on you real good because the head and shoulders don't always live up to what they're supposed to do, but the probability is a bearish move. It's a run up, a failure, a pullback to some level of support, another break above a previous resistance level or a previous high, a failure, come back down to a support level, a retest, and then it fails and it breaks the neckline. And the entry is when now some people will enter when we get a reversal up here. And I'm an early entry guy because I want to get in. I'm impulsive. I'm an impulsive trader. But you enter early, the risks, I like confirmation as well. So if you enter early, you have to set your stops tight. But this thing broke down and it broke the neckline and it went 3 or 4 days down. You take your profit. You just take your profit. Push up. Let's see one thing. Okay, Selena, let's see. One sec, guys. But Chegg for me, let's just see where Chegg. It's in that range. It's really a wedge pattern right now. And I mean, we really don't have to draw that wedge, but price contraction or you know, we have a wide move. It's kind of tightening up. Resistance right there, support. We actually could have entered on Friday, you know, but it was on declining volume. So it's not the best setup. I'd prefer if I were to get in comfortably above that 90, above this little area right here. But we could enter above this move, above this level right here, above the 85.17. It just looks like it's range bound right now, Renata. It's going to be a tough play for me. I'd like to see it above the 89.50, 89.52, like right there. There was that is the high was 90.29 on the date of July 30th, 2021. Because the last time we run up here, there are several times we just couldn't get above this level. We get above this level, have a chance to push, you know, get up to 95 possibly, right? There's room above. When we get above that 90.50, let's show and prove we can get above 90.50 on an entry on Chegg. I'm gonna write that down, guys. Not saying you move in on it, but it's only bullish at that level above 90.50 for me for a play. Now there's a short possibility on Chegg as well. I mean, if you want to enter early next week, if it's the low of that 81.94, but that's still too tight for me. This bearish candle, if we break below that, there's a chance to fall. Let's see, 79.43 is the low. I don't like check for a trade period, but I mean, it now long term, it might be something for you. It might be a play. So that's all I have on that. I wish I could give you a bit more. Let's go to everybody be humble for Miss Marie Noel, HMBL. 84 cents. Give me, I gotta unmic, I gotta unmute you for humble. I need to hear this. I want to hear this story. And if you sell me on it, I might buy some shares, but what's the reason for this one? I can't do it. Okay, Miss Marie, you on the mic. Give me the breakdown. Humble. It's going to be a long term.
Long term, yes.
Okay, what do they do? What do they do? I don't know humble.
On Humble, they provide services like a bit like Square, but
they're like Square?
Yeah, but the platform that would be available to more businesses. There's actually a lot of businesses already using it at the moment.
It's breaking up. Okay, so they're a fintech company.
Yes.
Okay, well, here's what I do with that. Let me go. Definitely not a trade. Let me move into this. We're probably gonna have to we'll have to type. I think, did I lose her? Okay, guys, look, if you like the 84-cent companies, I'm not saying don't hop into it. Definitely not a trade. If you get in it, you sink the money and forget about it. If you really believe in whatever they do, and I'm a fan of fintech. I'm a big fan of fintech, but I don't know. I don't know these guys. Here's what let's go like this. Let me find. When I do my trades, I'm going to pull up Investors Business Daily for everybody. Let's go real quick. I don't want to wear you down with this. Okay, HMBL. I want to know, is there any institutional interest in this? It doesn't have to be. I could be ahead of the, we could be ahead of the game. Let me make sure this ticker is right. HMBL. And if they're not in Investors Business Daily, that's a little bit of a sign they might be just a younger company. Then I'll go to Yahoo Finance. And I want to know, okay, they should on Yahoo Finance, guys. If you start doing your research on certain companies, you want to know are there any major players in it? Because we can trade all week. We can do that all we want. We can look at charts. Charts are cool. I love them. But if we want to buy and hold a little bit more, I need a little bit more than charts on top of it. The chart will let me know if I'm in a bearish trend to say, okay, I might expect a little bit more of a pullback. But I go right here. First page, company outlook, chart, conversations, historical data profile. I go over to holders. I want to see who's in it. It'll tell us the percentage of institutional investors. No major holders yet. There's only 6 institutions holding shares. Humble, you need to have conviction on it. And just, this isn't anything I can analyze because it's going to be a conviction play for you, Marie. It's going to be one that you're going to put on there that you have to play, because it looks like folks were in this thing. It's a lot of, 111 million. It's been a lot of people in it. 241 million, 19. Okay, when did they come in? 14, 20.
Also something I looked at.
Yeah. Yeah, Marie, you're gonna be the expert on this one. There's not going to be anything I can tell you that's going to be of any substance, because I don't know the company, and this thing could break out, or it could just continue to trend down and trend down and trend back down to the original breakout area around there. So you have to make a decision what you want to put in that, if you're going to dollar cost average or not. But Yeah, it doesn't make any list for me. I don't know. I wish I had a better answer for you, but you have to roll the dice on it and let us know within a year, a few months, if it's anything. Next one, we're gonna go to Chipotle. I might get some today. Oh, bull flag setting up. Okay, this is a nice chart. Now look, guys, we're not looking at the price. We're not looking at the price right now. I'm looking at the chart, the peer chart. Now it's going to be tough to play it with the regular account, but we're going here now. I use the RSI. RSI, it changes on each time frame. RSI is the relative strength index. And when I give you these names, guys, let's not be the ones saying, so what is that? What does that do? Hop on Investopedia and you tell us what it does. That's how we hack it and we keep going. I don't rely on anyone else to give me the info. I'll take some info and I'll verify it, and that's just part of the game. But and Marie, if you raise your hand, if you could type it in the chat for me, that'd be great. But Chipotle's set up and it's still pushing. It's overbought, guys, but we can remain overbought for an extended period. Like if you're above 70 on the RSI, that's overbought. Below 30, oversold. That doesn't mean you start shorting once you're overbought, and it doesn't mean you immediately start buying once it's oversold. It's just letting us know it's another indicator that says, hey, okay.
JD, I'm sorry.
What's up?
I think what people are putting in the chat, your screen is still showing the HUMBL on the Yahoo Finance.
Thank you, man.
Chipotle.
I
Yeah,
knew
that's
it.
what everybody's trying to tell you.
Thank you, dog. Thank you, brother. All right. I knew it was coming. I knew I started switching screen. Okay, look. This is a good one, guys. Overbought, over 70 on the RSIs. Thank you, Marie. Thank you, Brian. Oversold below 30. This chart is a strong chart for me, Chipotle. And that's the RONA waterfall. And ever since then, it's been bullish, bullish, bullish. There's been periods now, if we look right here, we've had double top, a little bit of a range, double bottom over here, but still never broke below these lows right in this area. So, they keep raising, making higher lows, which is a good thing in a bullish and like in a bull trend. You want to make higher lows. So if you go up, you pull back, go up again, you make another, when you pull back, you're making a new low. But if it's above the previous low, that's strong. So anyway, bull flag had a nice gap up right here into strength. Now, Chipotle can fill a gap. It can come back down and fill this gap. And that's one of the old axioms. All gaps must be filled. Well, a good percentage of them are filled. And if you look at it, price will hunt a few things. Price will like when we're pulling back, price is going to hunt like the 50 simple moving average, the 200 simple moving average, the 21-day for me sometimes. I use the 8 sometimes, or I had a joke. I don't want to use any jokes right now. Or we pull back and you fill a gap, and we see it all the time. It's just you start paying attention to it. There's another gap down here, but it kind of filled it. It might have been a perfect fill. Let's see, low 122.20, high. Let's see, 12.16.64. That might be good enough for them, so who knows? But anyway, bull flag. Friday could have been an entry with a test of this resistance level right here of a high 1912.75. And I don't know how Chipotle trades. This is one of the areas I go to, guys. Go to on Thinkorswim. I'll go to Market Watch, and I'm in the quotes section. And the one thing I rely on, if I don't know a stock, I know most of them, but ATR, that's the average true range. What's the distance that has moved over the last 14 days on average? So we can click on the high ones. The ones who really, really move, they're going to move like Chipotle moves $33.78 a day. So if, let's say you got into it and you weren't realizing that Chipotle runs like that on average, that would shock you. It would shock us. We wouldn't need to deal with that, as opposed to we move into a stock like, let's go with Solo, Electromagnetica. I like those guys. They're in the EV market. They're a very, very small niche EV player, but they only move 20 cents a day. So this is where people kind of mess up. I'm gonna tie options into this. You get, let's go to the options chain on Solo. We know Solo moves 20 cents a day per our ATR. So we want to buy options. And you say, okay, the cheapest options are going to be the August 20th, the front month options. And even cheaper, they're only charging 4 cents, you know, right out here. Or I can get these for $3 and it's 1,400 people in it, or I can go $2 for this one, you know, and it's 3,354 people in it. Out of the money, people will buy it to get to, you know, it's only, you know, it's $1.50 away, 20 cents a day. And that's if it's going up every day. Out of the money. So we're putting the odds are against us when we're buying very little time to expiration, 6 days. We know it only moves 20 cents. We're $1.50 away. And then delta is very low. So for every $1 move in the stock, my option premium moves a nickel. 1 nickel. So little things like that, guys, that are things that we can learn and kind of keep ourselves from shooting ourselves in the foot when we hop in options, because everybody wants to get options. All right, bullish play on, it's bullish for me. The entry could be next week above 1891.25, give or take. You set the stop right here, right? Because if we break below this, we're going to test this range of support. And if we fall below this little candle in this little area right in there, we might start going to hunt for that gap. So there's some shelves of support for Chipotle on, you know, that we could pay attention to. But I mean, Chipotle long-term is bullish, but for a trade, it's something that you hop in, you set your stop. If it's there, you get taken out. Now, it's going to run up. It will probably bang its head against this, but I don't know how Chipotle, if it can press through resistance, how it does. Because when the last time we had to pull back, it gapped through that level of resistance. So that's all I have for you on Chipotle, brother. I think y'all can see the chart. Thank y'all for all those messages. So let's go back here. Let me get, and I'm gonna get to you guys. I promise. And if not here, this is my email address. I'm not gonna be able to answer everything, but I can do what I can. JD@yourmobiletrader.com. That's the email. If I can't get to it. But all right, next one. NVIDIA, loving NVIDIA, love the chip sector. And guys, let's say you can't get into NVIDIA. There's a way to look on FinViz, and we can, it's called the sentiment play. If NVIDIA is moving the market, it's going to be moving that chip sector too. So there's going to be other chips that are going to run in as a result of NVIDIA's positive move or negative move. So, all right, guys, first thing I look at is daily chart. RSI is great right now. It's not overbought, not oversold. We're right in the middle. Have a bullish trend. Really bullish trend, found support. Push up, pull back to support, ran up again, pull back to support again. Friday, I know some people definitely got in. This was the perfect setup for an entry. We might run into resistance at 203. To 205.50, 207. Yeah, man. NVIDIA is bullish. You could hop in next week. When I say that, you have to have, yeah, I like to zero in on my entries on the 5-minute chart, but the weekly and the daily are my the foundation of my charting. So as we move up here, that was a bearish pullback, and they're making higher lows. NVIDIA is bullish, man. NVIDIA is bullish. We might get a double top here, and we test. Once we test it, we'll see how it acts once it gets to that double top. But this is the pattern that's being drawn. You can call it a wedge, call it a triangle. It's going to test these angles. You know, you have the trend line within the pattern. Then you have the support and resistance levels that are horizontal. We'll get that. We'll get to those levels, and we're going to see what's going to happen. So it might break above it and come back and retest. So I do like to enter at the bottom of a pattern. If I get my entry, I should have been in this on Friday. And long term, I'm bullish NVIDIA, and I do love the fact that I think they did the split and lowered the price. So NVIDIA is bullish. Let's look at the options chain real quick on NVIDIA, because NVIDIA is the average player can hop in and make a move on NVIDIA. Let's see what October 15th looks like. I like to buy time. A little pricey. Out of the money's, 1,100. But if you can afford it, that you want to buy, look at your delta. You want a delta. You have to pay attention to delta. I'm not going to do that class right here, or not a class, but that breakdown. It takes a little too much time. Let's see what September. A lot of people in that September 17th, $200 call, 17,000 open interest, 2562 volume, great implied volatility. So the option sellers are not selling this on me. I like that one. If I wanted to move into something, I would move into the 200, but it's not to say I would hop in like at the open on Monday. I let things settle. But if my stop is right below this red candle, the low of 194.30, I might even make it 195 if it falls below, right there. But whoever asked for NVIDIA, this is bullish, even more bullish when we get above right here. I like new highs, man. And that falls right into the can slim method. Some people don't like new highs. They'll immediately short, but there's a chance NVIDIA could move up incrementally and make a new high without being overbought. There's a difference. You make a new high and you're severely overbought. Yeah, there's a chance for a reckoning and a pullback, but we have to come with context. So I'm bullish on NVIDIA. It makes the list for next week. And it makes the list now that the premiums are kind of high. So there's individuals in here, I think, that sell options that are really good with constructing exotic plays. I'm a directional player because I use options to trade the stock. I go higher deltas. I'm a high delta guy. Anyway, let's go for the next one, guys. I want to get to as many people. Lowest strike on 9/17. Just saw that. Mm-hmm. 210 would be the lowest strike. But let's say NVIDIA pulls back and then it mounts another comeback. I can't, that it's a flowing lowest for me. So I try not to go that far out of the money, but NVIDIA runs, and guys, this is what you do. let's go back to the ATR. On the daily, on average, NVIDIA moves $5.67 a day. All right, let's see what, hold on, wait a second. And pay attention to earnings. We have earnings coming up August 18th. So that we might, okay, here's the earnings play, guys. If you're long-term buy and hold, you cannot worry about the earnings that's right in front of you. If it's long-term, you listen to the call and okay, yeah, we're good. But really we can't anticipate what short-term price action will do to an earnings event. But if we're a trader, we can trade on either side of earnings. So you can, there's something called a 14-day or 21-day earnings play where you get the option within that 14-day window or 21-day window of a run up into earnings. The idea is we're trying to capitalize on the increase in implied volatility or the increase in volatility in anticipation of the earnings event. So we're buying the rumor, selling the news. So we exit the day before earnings, before all of the excitement is sucked out, or we hop in on the backside of earnings off of a good call, or if the chart's set up. So 7 days prior, we're in a decent window. So there might be a run up on NVIDIA as we head to earnings. So that's just something. I think NVIDIA split, guys. Definitely, I don't know if it was 8-1, 4-1, whatever. Somebody can put it in the chat. Let's go. So NVIDIA is bullish. Nike, B. Dillard. Get the Kaepernick play. NKE. Nike's been running. And actually, Brian's one of his thesis, man, and a lot of others, and I kind of put it in this one too. Nike's moving into a tech play, man. They're moving it from Brian's breakdown of he broke it down of how quickly those shoes, the creativity of a new shoe, the signature shoe. We can have our own signature shoe and order it online. Okay, we got a nice little trend right here, bullish trend. Very tight channel. And this is a bear leg and a bullish move. We had a gap up on earnings with big time volume play. Who knows if if they'll fill this gap. Let me back out because Nike may have filled. That is a serious gap up. But there's support around 147 if we do pull back before we get down there. So, okay, entry. Friday was an entry. We get above 173.25. That's 22, but 173.25. It's another chance at an entry. And really the comfortable move. Now, look, guys, we are sniffing 70 on the RSI. So we're coming into overbought status. But if you look, the last time it broke it, it was like June 25th, and it stayed overbought from June 25th through like July 16th. Pulled back down, stayed overbought again, July 20th. These are estimates, guys, to August 10th. So we can do that. Just know there's might not be a lot of room to run on that, but it is a bullish move. I'm long-term bullish Nike, but I don't participate. I hadn't participated in it. I hadn't traded it. So I know Brian is a longer-term player in these markets, and he goes into the leaps. Now there is a gap way back in the gap. Hey, back in the gap, March 20th, right after Rona. Right after, I see my wife coming in looking pretty. I do that, Shamar Moore. Hey, fellas, Fellas, give these ladies a round of applause, fellas. I mean, woman looking so fine. Woman, this fine shit. You should be married, sister. So what's your name? Dude, quit being fake, man. Wife calls me a hater. So anyway, okay. Look, man, there's a gap down here, but I don't know if we're gonna get back to that. I'm bullish Nike, but when I see big gaps in price, it stays in the back of my mind of like poor earnings, and it breaks through a price level and comes down, fills a gap, fills another gap. So it's bullish, but it's not on my list right now. You know, that's how I'm doing it right now. Get some wine and cheese with the Zoom, Patrick. Yeah, man. We can order it, dog. We can order it. I don't eat cheese, but we can give me some seeded grapes and get some Dr. Sabi approved stuff. Get a little Sabi action. Raytheon. I like Raytheon, man. Wow, that trended right to Patrick, man. Okay. Now let's see with the chart. Bullish move on Raytheon. The chart has been kind of ugly in certain spots. These are anomalies outside. I tighten up my trend line sometimes where it engulfs the majority of the price action. You might have an outlier candle, and but Raytheon Tech, I could call this an ascending triangle or just a very tight wedge. When I say ascending triangle, where price kind of hits a ceiling, but then we make higher lows, but price still doesn't break that ceiling, but we're still making higher lows. We need to get above this little level right here, 89. So get above the $90 handle. There's some room to run, but if it's a light supply zone up there, if you do, you got to buy time, and you have to set your stops on long term. Yes, man. Raytheon, I like the technology. I like when they combine and merge with that other company. I can't remember what they're doing. So long term, I'm bullish aerospace. I'm bullish that, but you get this breakout, guys. A lot of times we get that breakout, that initial breakout from a pattern that we have set up. Let's say it goes up here and breaks above this level. A lot of times it just doesn't run to the moon. It breaks out, retest, might come back a little lower, may retest the bottom of this trend line, and then recycle and come back through. So it's not always a guarantee once it does breach the resistance level. A lot of times it comes back and I left my shoe, I left this, and it come back, then it'll hit, or it fails again. So the setup isn't there for this. There's a small window. Yeah, it's not even worth it, man. We get above this little ridge right here. It's just too tight for a play. It doesn't make my list now for a short-term trade, but it makes the list, for a nice long-term possibility. And the guys, again, if we do long-term, nobody can tell us why. Nobody can tell. It's like it's my decision. Why are you in this? Why are you in that? Why when you get so why is your mama, don't ask a grown person why, unless they're telling you to buy something. But be prepared. Be prepared for 6 in one hand, half a dozen on the other. This one, this does this, you shouldn't buy that. Well, so you kiss my ass, I'm buying what I want, that kind of stuff. All in the clubhouse rooms, guys. But the difference is establish what your strategy is. Like, this is a long-term play. Or then when you start talking about your trading, people say, oh man, this and that, you can't make money. Their earnings. Well, the chart is set up. It's a trade. So back off with the, don't move in. So you're going to have your reasoning, especially if you put it out there. Now, SMH, I like this setup, man. And I've heard people start talking about that. I think SOXX is another semiconductor play. So if same, I mean, okay, look at patterns, guys. We can see a similar pattern. Higher lows. I mean, we could even say a wedge or just a rising wedge, whatever we want to call it. But we go back to SMH. It's the same flow, same pattern. So, okay, we got that. $262 a share, give or take. So if we're going to do this, I'm thinking this is an infrastructure play. We have to buy time. We have to buy time because we don't know what's going to go down. Next thing you know, they're going to put the news out and say there's another chip shortage and blah, blah, blah. And, you know, it could hit it. It could hit against us. But this entry, that's 265. That's two. All right. There's room. Above 265.58. That's a previous high on the date of 8/11. You know, we could come in off of a new high right here, but the context in there, I want to get above another little level. And then there's room to try to test about a $4 move to see what happens. The stop is right here. Let me put SMH on the list. I think that's Patrick that did it. And guys, I'm sorry if a couple of little cuss words got you. I know if my wife is in here, she'd be looking at me, but I feel like cussing a little bit today, man. Just a little. Haven't been able to do that. I don't cuss around baby girl, but all right, it makes the list. But the stop at 258 handle is going to be the stop, like right the low 258. Okay, 258.50 is a stop. And entry above the 265.58. Because we're in a bull trend, guys. It's just a bullish trend. It's a lot of chop. So this is a move that we get in. It's the Bobby Brown, man. It's a quick in and out. You're not gonna meet the mama, daddy. No, you just go in, go in, get the draws, and go, man, and in and out. Yeah, I said it. Let's look at the charts. Look at these option plays right quick on SMH. Brother said the Bobby Brown, get the draws, quick play. And anyway, I would want to go out. 30 days is good. 30 days is cool. But infrastructure, I want 60 or longer. You might have to pay a little bit. And guys, look, don't fall for the banana in the tailpipe thing, but just because we go out of the money and it starts getting cheaper. And you start, oh man, $80, I got $65 to throw a little something at. Look at the deltas, those single digit deltas killing us. We might have to pay a little money for the semiconductors. For me, if I were to make that move, if it does move into position, the lowest I go is 275. Maybe 280, but I prefer a strike or two out of the money with this one. So this is it's a play, guys, but you need time. Don't go weeklies, please. One of the risks of these options, if we're undervalued, we're undercapitalized, so we cut corners. I do it all the time. Like, you know what, this move's gonna work out, and I'll get a weekly and chop it up a little bit shorter, and then something hits that we can't, it's the random, there's random events in markets. What is the guy that wrote the Black Swan books, Taleb? He talks about those random events, man, that we can't quantify, and it happens. So let's see what SOXX. SOXX is at 455, but I'm thinking, yeah, nah, SMH is a better move. Okay, SMH looks good. Okay, guys, let me get to it. Let me get to it, man. I knew Richard caught, man, Richard catches my jokes, man, with the timing, with the badump bumps and all that, or badump bump. Okay. Let's see, can't see the chart, can't see the chart. I'm scrolling through, guys. I'm getting back. All right. CVNA for Morris Chestnut. Morris Chestnut, run Ricky. I know somebody caught that one. 360. Carvana. We talked about that in Trade All Day. That's a bull flag setting up. It's near the 70 on the RSI, but this thing is moving. And again, guys, this is a technical analysis. So people say, well, why are you getting Carvana, man? Wouldn't you think that this and blah, blah, blah? The fundamental not coming into play with this. This is a pattern. Now, if I go further out and start getting shares, yeah, I'll debate you on that. But if I like Carvana and I want to have the ping pong machine or the vending machine, put my car out, I like them. Let's not debate it. That's what I'm running with, you know. So if that's your play, you make the move. Or you be like my boy bought his wife a car and they split up, man. I'll put that thing right back in that vending machine. I'm petty, but anyway, pullback, found support right here. I like this. Carvana might be pulling back to retest a little breakout area. Okay, pay attention to your levels. If it falls below the 357.89, that 356.80, these little three candles, the three little piggies, that's the shelf that it's kind of sitting on. It's holding its support. But the reason I'm saying this is because the wicks have come in on top, and not major wicks. I mean, it just, the pattern to me feel that reversal pattern is possibly there. Not to say it's going down here. Now, we are in jeopardy if it does pull back and start hanging out here. This is the line in the sand, a pivot point right here. What's the low? 326.47. So 326.50, give or take. Let me fix it. That's a pivot point, and below 326.50. And I'm gonna put you can put alerts, and I try to do that on TD Ameritrade, just below, not to say it's gonna get back here, but if it does, we can play it on both sides. You can do a short-term short. And when, okay, guys, here, look, when people say, hey man, what are you doing? I said, I'm long EV. That is, you can be long for 6 seconds, 6 minutes. Long doesn't represent the duration or the time. It represents the direction. Long is bullish. I want the price to go up. Or like, no, man, I'm short all the startup EV, all those SPACs. I'm short those guys. That means I'm bearish. I want it to go down. It could be I could be short all the startup EVs for 6 months. So I like when I try to tell someone, so are you long? No, it's just a swing trade. Well, you can be in a swing trade and be long, because that means you want it to go up. Yeah, I know. So be careful about being a yeah, I know when you know you ask someone a question. So be prepared. Go to Investopedia.com and type in any term, any terminology that you hear. Keep that running list. And I know Renata does it. I know Lucretia will put some in Discord. I don't go into anyone's Discord too often, but I know Lucretia has that stuff down to a bam, bam, bam. It's in the Discord. So there's resources at our fingertips, guys. So we have to use it. Now, remember, this is the pivot point. I'm going back to Carvana. Pivot point right here could retest these levels, but there's support levels in Carvana, different levels of support, but it just, I can see these shelves of support below. And I just, the setup in there for me, it might break out and run, man. I just don't see the setup right now. So I like them long term, but not right now. Let's keep going. Let's go. And guys, thank y'all for staying here in room reset. If you're in trade all day room, the Zoom is up at the top and the password is 777-9311. I know y'all know this song, Morris Day. It was a pretty good song, guys, and it doesn't matter. I'm a grown man. Okay, here we go. Fonsec, Merle, UWMC. Holdings. I hope it's a long-term play for you. If it is, I'm not the expert on it, Merle. I know that, I know your flow. You understand. What's up, Patrick? You know the flow of like, there's a reason that you're in it. There's a reason that you're in it. And what we do have had a accumulation right here and a bullish breakout, bullish candle, but running right up to resistance at 789, 790, right at 8. You know, it's going to take some time for this to run, to move. I don't know what it's going to do. It's not really one I even worry about. If I'm not trading it, and I wouldn't swing trade it, move in and out, make a decision on it and say, if you like it, there's a reason behind it, and run with it and live with it. And you know, because I can't give you the breakdown, especially on a stock that, you know, I mean, there's a lot of shares in this. And what let me just do one thing. One thing I like about TD Ameritrade, UWMC, we get the get a good little news breakdown. UWM Holdings Corporation announced the earnings, public traded indirect parent of United Wholesale Mortgage. Okay. And the mortgage, guys, this is something that the moratorium is going to expire, I think, September. There might be, I don't know what direction it's going to go over the next 3 years. You know how there's some lag time on people defaulting on loans or anything like that. So who knows what's going to happen? This could be a great play, or it could be one that could kind of languish or lag a little bit. So it's not one that I'd look at trading at all, or it really it hasn't made my list of interest. So I don't know what to do with this one. You're gonna have to make a call on the time horizon on this one. You know the breakdown, Merle. If you're in it, decide when you know how long you want to stay in it, and see how long does your thesis play out. We have to have, and it's, if we lose money, that's the cost of doing business. It's just how it flows. Groupon, let's go to that one. And guys, okay, Groupon is a short right now. It's probably gonna bounce a little bit, but there's people who love to run into that, like that's called buy the dip for some. This is called catching that falling knife, where we real like a truly bearish pattern within a bearishly parabolic move down. Now there's support down here at 1856 to around 22, give or take. But if it breaks that 1850, it's gonna go back in. It's gonna hunt that gap right there. Tell Tiffany Haddish to do something with that Groupon. Has she mentioned it in a while? 1710. That's the gap fill. Not saying it's going there, but look, if you have $10,000, are we getting in this now? What we're doing is trying to build a little bit of a little hammer candle, but I mean, that's like 1, 2, 3, 4, 6 bearish candles. And if I move the screen down a little bit lower, we'll see that trend, it's like, okay, it's not going to be just, when you sell off this heavily and then volume did pick back up, we are oversold, but it doesn't mean it's going to have a V-shaped rip up. It could, but a lot of times it does this sell off and we go into a little bit of a trading range, retest. But the trend is this. This is the trend line that has to be broken before we can become bearish again. So this thing needs to mount a comeback. It might go down here, might come back up. It's still gonna have to reckon with this trend line, and it still could. So we might have a push up and a second leg down, or even a third leg down. This is a no-go. Even long term, if you like it long term, I can't talk you out of it. It has to be like, I'm cool with Groupon. I like what they provide, and just stay on top of it. The trade won't work. There's no trend for, now the setup for a short is there, but it might pop on Monday and people will cover. You buy back your shorts, take your profit, and then keep moving, or buy back the shorts and then people continue to panic and realize, my good Lord, what happened? Like right there, we had 9 million shares purchased, and it's perfect push up. And I'm seeing that pattern, kind of the pattern that I saw on what was that, Carvana, where the kind of wicks came up on top and there's a little bit of a reversal. Not saying it's going to do this, but that's the only reason Carvana wasn't set up for me comfortably. This is a no-go off of a short-term play. Possibly long-term, but there's nothing that can say, hey, we know for sure what Groupon is going to do. Okay, here we go. I'm getting there, guys. Bank of America, Phyllis, Mr. Tony shorted BAC Friday, but it's going to be cyclical. But what did he say about the yields? Like 10-year, and now long term, if you're a fan, you make the move on Bank of America and accumulate shares. Is up to you. I can't make that call for you. On a trade, we're coming up to a little bit of level of, resistance, double top type situation, but there is one play possible. We break above this small, so tight, man. Bullish side above 42.30. There's room, small amount of room. It's not a play for me. That now we go any lower than what's that low? 41.50, 41.43 previous low. We might fill this gap. So there's a bearish setup on that below that 41.73. I mean 41.43. I'm gonna write that down so y'all can check me on it. If we fall below it, it might run down to fill that gap. BAC 41. 41.43. Okay. I can't remember that Mike Epps line, what his line is in that movie, All About the Benjamins. Anyway, a lot of people were moving into Bank of America, and it still could run because XLF, guys, that's another one of the that's your financial ETF, one of them. It been bullish, but it's broken above that resistance level. There are other banks like Credit Suisse in there, JP Morgan. So it's a mixture of all those. So now think about the XLF. If we break above this level right here, 38.95 or even 39, it might push. And we're beholden to rate information, any news on the banks are going to move and they might, I don't know if it's going to be they're coupled with a particular, which particular index they're coupled with, but there's something. I don't trade the banks often, but you get the rate information, the higher the bump in rates above. We watched the 10-year, you know, the yield that goes above. I think Mr. Tony was like 1.35, 1.4. The banks might run. So I don't really trade the banks, guys. Let's see. Stayed away from XLF. One bank goes, but if Bank of America goes down, okay. So the dividend, if it's a dividend play, keep it. You know, own it, and build that. So because people can have, you know, we can build dividend income, and you get to a certain amount of shares, we sell covered calls against it while keeping the dividend income and not exiting the position. So those are strategies that could come into play. So if you're in a position, yeah, long term or even a midterm play, rock with that. Let's see real quick. Okay. And we'll go eBay. eBay had a serious push. Got a double top right here. Let's see how it acts Monday. I don't know if it's going to continue, but it had beautiful volume going into this. There might be a little profit taken and a chance to re-enter on eBay. I don't have a long-term designation for it, but it's a bull trend. There's no trade set up. The trade was missed. We missed the trade. This was beautiful right here. It's a double top. I don't know what's going to happen. We have your higher lows, and it's at a shelf right now. It's at that wall, you know, right there we go. So we'll see how it acts within this little pattern. We're gonna go to the next one. Yeah, eBay is at an all-time high. I'm fine with all-time highs, because how do you make an all-time high? You have to go past the previous all-time high. You know, people don't trade all-time highs, but if the context is right, let's rock with it, man. Let's go if the setup is there. But yeah, I love all-time highs. That's people buy in at all-time highs all the time. So not to say to do that. Okay, let's go right here. FTNT for Trent. Yeah, Fort. Ooh, that's a bull flag. This is a bullish burst for week on top of week. And guys, I'm cybersecurity bullish on that sector for years down the road. We are heavily overbought, but there's something called a final flag, where you make a push like 20 or more candles, give or take, and you're running and running and running, and there's an exhaustion period, but this doesn't look like it's hit it yet. Run up, perfect bull channel, tight bull channel, pull back, shook some folks out on the same day and ran again, and with volume. The volume weakened Friday on a bullish candle. The run, guys, we can't get in this run on a trade, but if we get a pullback, 277, right in here to 295, 294, we might trend a little bit. There's no entry right now, Trent, for a short-term play, but long-term, I'm bullish, of course. Fortinet, or as some folks call it, Fortnite, you know, but it's not the game. It's not the game. But we'll pull back, or just keep running, man. Great chart, Trent. I don't know how to. There's no trade set up. The run. We missed the run, but there can be a secondary run after a little, might be into a trading range, and then, but there's no setup. The entry should have been Thursday, because we push up, pull back, made a new high, our entry would have been right in there. Anything above that right here, what's the high? 302.98, 303, ran up, sold off. People are still in this from Thursday, Friday, a little bit less volume. I like to see the volume doing that, increasing, but we'll see what it looks like Monday. But remember, we are overbought. We've been overbought since the July 19th. So almost a month overbought. So there might be time to come back and retest this. And not to say it goes back down. I'm looking at the RSI, guys. Pull back a little bit and then recycle. That would be a healthy pullback. Okay. And I hope that helped, man. Looking for an entry, 300. Yeah. That's I would love that. If that happens, man, please call that out. Cause you know what, let's set, yeah, that would be the trading range. Let's set an alert on Fortinet, 300 alert. And guys, just and I'll say below, I'll go below 301. Well, I'll just go below 300. It just gives me an alert that, hey, it's pulled back. It might be recycling. That's all it is. It's not just to say we hop in on this thing. What time did we start this thing? Almost 2 hours. I think, okay. Let me, I'm not gonna leave y'all out. Not gonna leave y'all out. But I'm about to go see my wife. Been on the road, man. Roku. All right, Maria. Roku. Yeah, we saw that last week, that pullback. And then so why is it pulling back? Man, who cares? We don't know. So if we do know, what's that gonna do for us? Well, we need to know, where's it, what are they, is it hunting for a level? And as one leg down, push up, second leg. So we might match, it might do a measured move with the same distance, and we have support down 333. These levels right here, and it's at that level of possible support. We'll see what it looks like Monday, because the last time it came down, it was in this area. We had the breakout, but it's not bullish over the short term off of a trade, because somebody has made some money on these puts.
Yeah, and if you look back left, that's the demand zone right now, where you were at.
Yeah, it's sniffing it. It's right there. So let's see what happens Monday, and it might be a chance for let it settle and find another push up, because I'm bullish Roku. Everything has to recycle, guys. It just does. Let's see what it broke that trend line right here. And I'm extending the trend line from a previously set trend line, guys. Price has a memory, and it could be hunting for either this trend line, which will take us right, like Lucretia just mentioned, like to a demand zone right in that same area. Once we get there, look for what it does at 350, 355, then the 350. Let's see what Roku does, if it can find that support. And then there might be a time for another entry. Long term, if you're buying shares or buying leaps or things like that, you get some time. There's interest. Now, like right now, I'm looking at you're gonna see notes. Chip shortage spirals beyond cars to phones and consoles. I'm looking at Bloomberg right now. I know that doesn't settle on Roku, but over the weekend we might get news on Sunday afternoon, Sunday evening, Monday morning. So be prepared for paying attention to little things like that might be market catalysts of fear, something that could stoke a little fear. But no trade for Roku. We're going to watch those levels for as we move forward, because If it breaches that demand zone, that'll be a concern. My pivot point right here is this little leg, the outlier candle. So the low 272.41, that's a long way away, but that is a pivot point. So we're ways away from that. We just have some support levels. So take a look at that. Let me get to this, guys. I know it's taking some time. I know y'all over there cooking some salt fish if you're from the islands, and cooking some sauteing some mushrooms, peppers, and onions if you're alkaline or whatever, or somebody barbecuing. Starbucks. Let's go. We'll do that. And guys, I might end up skipping over a couple. My email is in there. Hit me up. I might be able to get to, okay, Starbucks. Let's see this. Just like Roku, we were looking to pull back one leg, second leg. Starbucks is in limbo, just a tick. If it falls below this, and there's support there, more demand, a little bit lower at 113. Entry, what's that? What are these? 118. So we go one. My comfort level entry is above, you know, above that. And I'm not using exact parameters. Now I do use them when I look for certain previous highs, like above this 119.21. That would be a better entry for a trade, but we would still have to get above that 120.78, these little areas, to really retest some areas and try to get back up and fill this gap that was created. If we fall below, my stop would be right here, 115.50. Starbucks stop is at 115.50. Just get out, even though it might come down here just a little bit lower and run back up. But I don't trade Starbucks. Mr. Tony trades Starbucks regularly. That's one of his top five, I think, on his starting five. But the safer entries above there. But if you're a scalper, there's entries within this window. But for a swing, it's a little bit higher up. And I don't trade Starbucks, but long term, if you like that mocha latte chino, run with it. That's what I have on that one. Sake and saltfish. Okay. That's big over there by the water. Let's go with this. We got Roku, we got Starbucks. I'm just trying to get to them, guys. Yeah, so a lot of still on Yahoo Finance, JD. What are you doing? What are you doing, JD? Okay, here we go. FedEx, Satara. In the trade all day room, drops the prayer every morning. FedEx, okay. My son showed me a TikTok video. Dude, young brother, man, was putting up videos. He's very charismatic, brother. It was months ago, and he said, yes, get into FedEx. It's going to 300, or going over 300. Thank me later. When I see that, man, I just like, I caution myself, but I like confidence. I like seeing so many young brothers and sisters getting in the market and doing it, but we never know. But FedEx is setting up right now. We have a double bottom, and we don't have to have perfect horizontal setups, guys, when we go parallel, so this, to me, that's a double bottom. It doesn't have to be like perfectly just perpendicular to the angle of whatever. It doesn't have to be. We found some support. And now the entry on FedEx, I'm gonna put the stop, and I have to put my stop in there because We get below at 271. So 271 is the stop. And guys, we can go tighter. I'm saying that's a technical stop. You can go in and say you buy a $500 option. You don't have to risk all 500 bucks. You say, I'm only really willing to risk 50. It's going to be kind of tight, you know, or you say, I'm willing to risk $75 out of this 500 or 100 to try to make 200 or 100 to try to make 150. You have to establish that entry above 278.61. Let's see, 278.7. That's the entry. Above 278.75. Let me back out just a little bit. Because gap down basically broke. Boom. That's a wedge break, guys, and a retest. If we really start digging in a little bit deeper into this situation, wedge break. And I'm using the double bottom as the bottom of the wedge, but it's really, I mean, a tight wedge down. Price broke above. We broke above that trend line. Remember, I always say that that initial breakout a lot of times does not stand. It'll retest. We retested this. We're here. This is a setup, guys, for a nice little swing. Let's look at the charts. Great call, Satara. Thank you. FedEx. I want longer than 30 days. 30 days is good. 60 is better. Gives you time. But if our stop is tight, we can rock with it a little bit. No further, guys. Don't start going here. Don't go to 310. It's not that far away. We had 30. Don't do it just because 4,000 people there. Like you have 60 bucks laying on the coffee table, and the pocketbook up in the bra, and your book satchel. I'm using all some old words. We're gonna run up here. We're going to strike out. If you don't have 640 bucks, skip this trade, or go with $277 and buy one share and work on the trading technique of it. You know, and if you buy a share, let's not trade in and out of that. Go long term, buy and hold. But okay, that's the window. The September 17, 270 is a 280, excuse me, 280 call. September 17th, 280 call. And it closed, you know, at 615 by 640. The spread's a little wide, but you can split it down the middle. Last trade was 613. 45 delta, cool with me. Open interest 2187. Implied volatility, perfect for me, because we have it's like double the money to get up into the money. So we're looking for this, looking for this move. Don't do this one. Don't go 6 days out. Don't go 13. Don't go unless you're a seasoned trader. Now we have like Lucretia, Mr. A or A, Brother Richard, Gazelle, a lot of other people, man, Big Bull, Richard, everybody, ski mask. I'm calling out names, but people who in our groups that you know, they trade weekly options. They have a plan. You have a trading plan, but for what I'm laying out there, you want time, and you don't want what happens is theta becomes a mofo. If you're selling options, theta is your mofo. That's who you want to just blow up and eat up the premium. But we combat theta as a directional trader by buying time, to where we remove theta from the play. Okay, that's something you can study. Look, guys, it's gonna be my last one. Let's go Upstart, and my email is in there. I think I put it on the whole group. I think I was messaging privately on accident, but here, and I'm gonna wrap up on this one. My stomach is growling. And I didn't get a haircut today, man. I got to hit the road. Upstart. UPST. I think Upstart was my goodness. Now that's parabolic, guys. But it wasn't just the whole way. It wasn't just the only thing. Look, here's what we see when, when you get a chart. It's called the hard right edge. We don't know what's coming next. It's inverted hammer candle, whatever I want to call. A lot of times you see that when we look to the left, found support, you could enter above a hammer candle a lot of times, or you wait and get confirmation. But we had some volume coming in with that hammer candle. I can't remember what's going to happen next, but the probability is I would set my stop below the hammer. And I'm entering Monday. I would love it. I probably would have entered in a day on Friday. A little too early, but sold off, broke my support. Probably try to enter again. Trading range, pulling back. I'm like, damn, I'm really not understanding this ticker. A little too early. But that's that accumulation consolidation type area where these really tiny, small candles are coming in and out. That's an entry there. All of a sudden you have a breakout with volume. We're overbought, guys. So Upstart, it could keep running. There's not enough of enough data in there for me to, there's no setup for me. I missed the move. If you like it long-term, that's going to be on you. You're going to have to believe in what Upstart does. I can't remember what they do. I don't know if they're in the fintech or if they're in the lending or whatever. I don't know. But from a trade perspective, I could see a possibility of an exhaustion and possibly a retest of the breakout area to fill this gap and possibly another accumulation period. The chart isn't pristine for me because it's a new issue. It's a new company and we're just getting to know it. So for each tick that comes out, it's more data for us, but it's still on a bullish move. Not to say it's going to go back just yet. These things could run. Let's see if there's news, and I'm a wrap, guys. Upstart. While Upstart stock is continuous trading higher Friday after Barclays analysts upgraded equal weight to overweight. It says 130 to 230. 130 to 230. So people will hold that as gospel. Now, I'd rather have an upgrade than a downgrade, but we don't know when 230 is coming. So if you're into it, it might be a 6 month, so when does Barclays, are they further out? Are they projecting short term, next earnings, that kind of thing. So Upstart's performance, improvements, conversion rate, top of the funnel acquisition margin being more sustainable. Barclays additional upside potential, auto vertical and normalization of the credit environment. Okay, so we're in the fintech credit, the lending side of things. I do like that. So I think this is a longer term vision. Open-mindedness will come into play. So make a decision, guys. I don't have any real proprietary information to give you on Upstart, guys. So look, I hope y'all enjoyed it. I will wrap right now, but thank y'all for coming in. Thank y'all Trade All Day for hosting the room, and hope I was helpful to an extent today.